All right, everything looking good. Should be up and running. Maybe. Mostly looking good. All right, welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on March 12th, 2023. You know, it didn't even occur to me that daylight savings was coming into effect. So, what's up, Hex Evolved? I see you over there. Daylight savings was last night. So we lost an hour. So where I'm at right now, it's 8 p.m. So that's probably what's throwing it off. As always, before we get rolling, guys, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. And of course, trade responsibly. All right. What's going on, Persianon? How you doing? Yeah, the banks might all be gone before then. What's up, Durwood? All right, let's jump in here and take a look at what we got going on. So we saw a big move, and this is very, very important, what happened on Friday. We saw basically in the last few days, specifically weeks, months, however you want to look at it, we saw some issues with Silicon Valley Bank and Silvergate Bank, which is basically crypto and startup banks, two of obviously the riskiest banks. And they basically just imploded. There's a lot of stuff behind the scenes and everything. You guys have probably looked into a bunch of it already. But the actual reality of the matter is they both took unnecessary risks, did a poor job managing their risks and portfolios, and what amounted to liquidity and solvency issues arose, and they're out of business or bankrupt or, going through the process. That was 100% not just random issue. That was an issue with those banks that are basically trash. They were run like trash, and they ended up in the dump. So no big surprise there. In my opinion, this is not some big contagion or anything like that. I did look at the statement that the Fed put out, and essentially they're like extraordinary measures that they're offering, and I'm not sure that that would have even saved Silicon Valley Bank or anything like that, because the issue essentially was that they already took the loss. And people are saying, oh, this is insider trading. People saw it coming. They had insider information and traded based off of that. No, this has happened like over the last couple like days, weeks, and months. This has been taking place. This is not something that just happened all at once. We're just now seeing the effects of it all at once. And now people are realizing it. But like Silicon Valley Bank went out and did like a public raise, like sold capital to try to get money. So that's like already a public thing that happened that would raise red flags. So it's not like this was all happening behind the scenes, just nobody cares about it until you hear about it. And nobody hears about it until everybody's talking about it. And that's once the event has already happened. But there's no surprises here. This is not something that just happened suddenly. Silicon Valley Bank took billions. It was something insane, like $6 billion in losses. Those were a while ago when they were selling off bonds, basically substantially below market value. The issue then was liquidity, because if they didn't have to sell those bonds and take a loss, they could just hold them to maturity. And then once they mature, they get back their full principal plus the interest. But they couldn't do that. They needed the liquidity, so they had to sell them at a massive loss. And the reason they were at a loss is because those greedy MFers went out and bought a bunch of long duration bonds to try to get the longest or the highest interest rate possible. And they basically bet directionally on the market, which that's fine with some of your money. But they did that with a substantial part of their portfolio in long-term duration bonds. And then what happened? Rates went higher. So then the bonds dropped in value. So it's really just them being idiots. I mean, this is not some systemic thing, unless literally everybody that manages every company is also an idiot. They didn't hedge their bond portfolio and they took risk. That's not what banks do. Banks are supposed to make a spread. Sure, they take risk with some percentage or whatever, but that's not what happened here. This was a large enough percentage of their portfolio that it caused an issue. So this is 100% a bad bank issue. Nobody was worried about Silvergate when they were making, hundreds of millions, billions of dollars in profits over the last, 20 years as Silicon Valley boomed. Nobody was worried about them then. Same thing with crypto. So this is not a systemic thing. And honestly, looking at what the Fed came out and said they would do, I don't think it would actually change the issue, because giving someone a temporary loan or essentially just offering them solvency isn't going to change the situation unless suddenly they have a bunch more like inflows coming in, and they're not going to have a bunch of cash inflows coming in unless we're back in like, economic easing, obviously. So to me, this just looks like the switch between, the cycle that we were in into the cycle that we're going into. And it looks like just the beginning of stuff like this. It's going to be different things. It's not just going to be all these different banks. It's going to be exactly what the Fed wants. Get out some of the weak players. Get out some of the weak players in the market. Because over the last, 20, 30, 40 years, it was basically anybody with a dart could throw it and hit something. And that's just not how the world works. So we're just seeing that the worst players are getting eliminated. That, in my opinion, maybe I'll be completely wrong, but it won't surprise me if we see other big players in completely unrelated industries going away over time. So that being said, the market essentially saw the blow up and said the Fed is going to go higher for longer unless or until they break something. So what we see here on TNX, on yields, we see yields dropping almost 10% in a day, from basically 4% down to 3.7%. So not quite 10%. No big surprise here. Hard sell signal, X in the bullish control zone. It looked like it was going to come off here. We have to be careful it's not a lower high here. But really what happened is the market says, okay, so the Fed just broke something. So now the Fed's going to pivot. So yields are going to go lower. So that was basically a big portion of the market betting that, hey, that was it. This is systemic bank failure. And now the Fed is going to pivot. I don't buy it, but I could see why we would see the resulting move, and then obviously like a move up in gold because people are afraid. So they want gold, a move up in bonds, obviously the opposite of, the yields. Same thing, weakness in the dollar as people are worried. We saw, issues with stable coins. We saw all kinds of just random stuff happening all around the same time. And the truth is, it's basically just people are worried. They're worried, are they going to be able to get their money back? Suddenly, all of a sudden, people are worried, who has their money? Did I actually vet these people before I gave them my money? Is this the next Sam Bankman-Fried? I mean, it makes sense. These are all rational fears. But our job is to figure out where that money's going to go. And obviously, I know what you guys are thinking. Who cares about this trash? Let's talk about Bitcoin and that big stiffy that we got. Oh my gosh, Crypto Trend Trader, you were exactly right. You called the absolute dollar to, the penny, where it went. You entered the trade. We're up since then. You did. I get it. We'll get there, guys. Just please relax, okay? It was the easiest trade ever, so obviously it worked. Congratulations. I'm excited too. So anyway, TNX, yeah, you guys don't care. I don't care either. TLT shot back up, testing the 200s. What we're looking for basically on these charts is, hey, is this actually a bottom? Is this a reversal? The most important thing, we have a low, we have a high, we have, a higher low one way or the other right here. What we want to do is either take out that low or take out that high. If we take out the high right here, we break through resistance. We start testing up here in that 120 level. We're talking about a 15 to 20% move in bonds, people. It's not a joke. But we're still under the 200s. There's still angle to the downside. This move happened very, very suddenly. And we know what it is. You take the stairs down in a bear market and then the elevator up. So we just march on down, march on down, march on down. We shoot up quickly, and then eventually we just keep going down. So we're marching down, we shoot up quickly. This is a typical bear market move, in my opinion. For now, we'll see how it plays out. So what did we see happen with the stock market? And of course, it seems crazy. It's like, oh, Mt. Gox, all the Bitcoin's coming back. So that's going to be pressure on the exchanges. Oh, it's the CIA's got the Bitcoin, and they're going to sell it all off to crash the price and get rid of crypto. Oh, there's always some story about whatever. But like, really, what happened? Like, banks failed, crypto crash, whatever. The TA did exactly what it was supposed to do. Just now we have something to talk about. Before it was like, oh, there's a double top right here and we're getting ready to lose the 200s on the Dow Jones, and that's going to be gross if we break to the downside. And now it's like, oh, well, we know technical analysis is fake and that this all just happened because Silvergate Bank. Obviously, that's what happened. Or, Silicon Valley Bank. Or, whatever. There's always going to be some fundamental reason where you can sleep good at night if you feel like this is what caused it to happen. But deep down inside, that funny little feeling we get in our pants, That's technical analysis. Okay, that's what that is. And we know it works. So Dow Jones on the daily, I mean, that's it. You know, we basically had our double top. We're at the 200s. We're breaking down, likely to get the measure move. The key is, where does it stop? Does it stop at a higher low? You know, do we find support somewhere higher up? If we do, you know, that's arguably just how you build structure, and we could potentially be going into a bull market. Losing the 200 exponential and simple, very, very bad. We're going to do something we don't normally do. Okay, we're going to go over here to longer time frames for no reason at all. Look at this weekly close. Disgusting. Okay, any hope there was of this being a bull market starting back over was based completely on the 821 bull cross right here. And we were threatening losing it right here. And we said, if this candle is nasty, if we get a bearish engulfing candle, this is going to look like a lower high. And what happens at the top of a trend when it goes from a long-term bull market to bear market? You put in a high, you come down, put in a low, you come up, you put in a lower high, and then roll back over. If that's what's happening right now, and it sure looks like it is, you know, this could get nasty. The most important thing is we must put in a higher high than 28,699 on the dirty, dirty Dow Jones. We must. If not, it goes straight to zero. That's it. Gone. Okay? Your parents are going to be moving in with you. So pray that it doesn't happen. I guess we'll look at the monthly too. We're not doing this for all the charts though. On the monthly, it looks gross now too. All the hope we have was that 821 bull cross right here, and now it looks real, real gross. Still have weeks left on the monthly, so we don't get it over, you know, we don't want to get ahead of ourselves. But 32,666, if we're under that, this eventually just crosses back down. And it looks like just, you know, basically we went down a bunch, we bounced some, it's lower, and now we're going to go down a bunch more. That's what it looks like to me. You know, assuming that trends are still a thing and technical analysis is not just a funny feeling you get below the waist. So SPY on the daily, same thing. Lost to 200s, breaking down. The most important thing, we did have like this ascending support channel deal right here. We had the squiggly lines. Some people asked me, is it possible that we could get this turned into an indicator? I'm working with some AI technology and possibly some, we'll just keep it at that. You know, I don't want to spill the beans or anything, but you know, maybe one day we'll get a squiggly indicator. Until then, okay, we're going to have to do them by hand. And for now, it doesn't look good. We broke down past the squiggles. Not good. We're outside the squiggly zone. That is not what you want to see happen if we're going to find support here. We lost the 200 exponential and simple. We lost the descending resistance. Now we're looking at, we have a low right here. We have a low right here. We're watching those levels. 377 on the SPY needs to hold. Already looks bad, but we're still technically, let's just say hypothetically, you came to me from 1 week in the future. You're like, I have time traveling powers, but I can only go 1 week in the future. How are we going to make money on this? I'm like, just tell me what happens on the stock market this week. And then you come back and you say, that was the low. It's just up from here. Okay, sure, that's great, because we have a low, then we have a higher low, then we have another higher low. It looks fine. And we have a high, and then we have another higher high, and then we go on and we put in another higher high. So that's still okay. It just means we're not like moving up quite as quickly. The slope isn't quite as extreme, you know. So it's sure, maybe we're losing a little bit of strength or whatever, but we're still trending upwards. We're still trying to move this trend back to the upside. If we don't do that, then we start worrying. So we're watching these key lows the same way we watch our previous swing highs. The Qs still close to the 200 simple. Doesn't look nearly as disgusting as the Dow and the SPY did. We also have like a pretty solid flat support down here at the bottom. So you know, we don't have like those two clear lows like we did on the SPY. You know, here we have a very clear low at like 350 and then another one at 375. Here we have, you know, basically 259 and then 255. So it's just one low. So we don't have that extra little round of cushion when we get to that next low where people can swoop in and buy. So we have to watch all of these individually. And then Russell, so Russell has that low. We're already kind of threatening it. I mean, this got real nasty real quick. And we see some of the big name Dow stocks got real nasty real quick. So that just tells you how the market really feels. It is worth paying attention though too, that we did get this very aggressive move to the downside. And there is, I don't want to say like exhaustion, but you know, we're at some pretty low levels. The knife is like stabbing through the bottom of the chart. Now keep in mind, the knife can go infinitely below zero. There's no limits. Okay. It lives outside the limits of space and time. That's why it's so great. Okay. Now that being said, it's at an extremely low level. I mean, arguably, without spending too much time on it, it's almost the lowest level. This is the last time this happened was when we flipped into the bull market right here. I mean, that maybe that's something right there. This is September 2020. This is after, the pivot out of the Rona dump. We broke above the 200s. We got this crazy knife stab down here and back tested the 200s. Similar to what we did right here. So maybe that's the bottom. That was the absolute bottom, guys. Hope you bought it. Or if not, that's it. It's gone. You'll never, ever get a good deal on the stonks again. Okay, let's just rip through this trash real quick and then we'll look at crypto. So DXY got wrecked, bounced, back tested the 200s, rolled over here. Saw weakness in that. Obviously, the big threat was the tag team coming back. And with the way yields just got rocked, and then also the DXY, I mean, assuming that was the top and we're just going to roll over from here, that's good for equities. So, I mean, there's a lot of signs that say, hey, this is a buying opportunity. Obviously, it already played out in crypto. So if you didn't buy crypto, that's it. You'll never be able to afford one Bitcoin or XRP or anything again. So, sorry, it's too late. It's gone. Missed your shot. Tesla rolling over here. Got to look out for that little air pocket, a little gap up right here. We'll talk about Bitcoin and the gap down as well, or up, the gap fill. Back tested the 200s, got rejected, rolling over, 821 bear cross. We had pretty aggressive moves to the downside in the indicator oscillators, and price didn't really go that far. So, again, it's the same thing. It's exactly the same, guys. We're just looking to see where this next low is at. If it's a higher low, it's good. If it's a lower low, it's bad. Microsoft hanging on to 200s barely. Overall, looking a lot better than most things. Looks like it wants to actually creep up here. Apple, same thing. Held on to the 200s. Holding much, much stronger than most of the market. Google looking pretty weak, but still holding that higher low. So we had to redraw the SPY, like ascending support line. That is not the case for Google. It's still holding on for now. Even though it's like the weakest. By far the weakest. It's terrible. But structure-wise, it looks good. Meta still has that big gap, so we got to watch out for the air pocket down to 151. Looks like a pretty clear rejection right here too. I mean, if you didn't get in the short right away on Meta, I mean, if ever there was a time, a second shot, that's it. But I mean, also, I didn't take the trade, so it can't be that good, right? Amazon, I mean, it basically gave back that whole rally. There's one level between the low and where we're at right now, and it's basically the 886, and the probability of that holding us up is not high. So this is it. I mean, it's either a great buying opportunity for that next scalp up, or we're about to just test the lows, which, I mean, we're a couple % off the lows now. So it's like, if you didn't buy the lows before and you're like, oh my God, I missed it. Well, we're 10% away now. So it looks like you get a second chance, which is funny though, because when things are at their lows, nobody wants them. Nobody wants to touch it. And then they go up and everybody's like, oh my God, I missed my chance. And then they go back down and they're like, oh, I'm not buying it now. And you're like, well, when are you buying it? I don't get it. I mean, we're trading these things. You don't got to fall in love with them. Every entry doesn't have to be perfect. We want it to be good, but at the same time too, I mean, let's take some shots. Obviously we have been, but, so we talked about this scenario and it's playing out a little bit, kind of rolling over. Got rejected way, way sooner than we thought, but essentially same exact idea, just not pretty. NVIDIA, I mean, this thing's still pretty strong. Got above the 618, hanging out for now. There is that little gap right here as well on NVIDIA. Got to be careful for that. Some definite bearish divergence. I would be real careful in this thing. I wouldn't be surprised if it went higher, but when it rolls over, it's going to be, I think it's going to be gross because it's right back to like way too high right now. All right, let's look at these cryptos. Let's look at this crypto trash. Let me jump in the comments real quick here. If you didn't hit the like button yet and you're still watching, what are you even doing with your life? I mean, honestly, you can't just click that one finger. All right. Sodos, what's up, brother? Good to see you. Said 6 billion out of 200 billion, I heard, is not a huge portfolio percentage, though. That was the write down, though, wasn't it? The 6 billion, and then they had to realize it. It was a whole big deal, and it was really just mismatched duration. If you were just able to hold all those bonds till maturity, it wouldn't have been an issue. except if it was a lot more than 6 billion. I haven't actually looked into like the actual portfolio breakdown that much or anything, but from what I understand, it basically was a liquidity issue that turned into a solvency issue because they had still plenty of assets on their portfolio, but if they had to mark them to market, that was where suddenly they were at sitting on like massive unrealized losses. And then once they started to realize those losses, had to go out into the market to get more funding because they were lacking free cash flow because suddenly they weren't getting a bunch of money coming in because it's called a bear market. It's called tightening. That was what happened. So in my opinion, it sounds like it was completely mismanaged business. Anybody that runs any kind of business understands that if you put too much shit in too much long duration, you're not going to be able to, just imagine like basically, investing in 30-year treasuries with all your money, knowing that you have rent due. Okay. And you're like, well, nobody's going to do that. If you have no extra cash, no one's going to just buy a bunch of 30-year treasuries with all their money, knowing they have like, $1,500 in rent they have to pay in a couple of days. So then you obviously like say, okay, well, I can think 2 months in advance. I know I'm going to have enough money in my bank account to cover next month's rent too, or money coming in from my job or whatever. So you plan ahead for these things. And then there's certain, time frame. You might say, hey, I'll buy 1 30-year treasury every couple years. So every couple of years, I have these things maturing over time. You don't just go out and put a ton of money in like 10-year treasuries. And then suddenly like a year later, you're like, spaghetti-o, no free cash flow. We're bankrupt now, guys, because we have to sell all these bonds at a massive loss because we're a bank, but we bet directionally on the markets, which is not what banks do. And we talked about this same issue with wood, okay, with lumber and timber. They bet on what was going to happen in the market with the Rona shutdowns. It caused shortages. There were supply chain issues, and that's what happened there. We said the same thing with silver. A bunch of these guys that are intermediaries for silver started betting on the silver price, and then they were wrong. So they were not wanting to sell silver when it was like $30 because they thought it was about to go higher, break out to 50. And so they're like, no, we're going to cut back on the amount we saw. And then suddenly, all of a sudden, it rolls back over and it's at 19 and they have to sell it. Maybe not specifically at 19, but, maybe 25 or whatever. That's why when your job is to take spreads, to take a cut, a little percent, a little off the top, you don't bet on the direction of market. Market makers are not supposed to bet on direction of market. They're basically just making hedges, so that they can make their spread. That's really what it comes down to. It's when everybody turns into a speculator that suddenly we have all these issues. And that's exactly what happened with these banks. They speculated on loans. They took trash assets for collateral. And then they did a horrible job managing things, speculating on, bond rates not going higher or not staying higher for longer. Well, all you had to really do was just not fight the Fed and you don't go out of business. Because you think, well, if bonds are about to go higher for longer, we're not just going to load up on 10-year bonds right now, and then they're going to be massively underwater, and then we're going to have to write down billions of dollars in losses. Like, it's not that hard. You just don't do dumb stuff. Or you had your bond portfolio. I mean, this is all poor. Everything I've heard so far is like, sure, maybe there was some gray area stuff. Maybe there was some illegal stuff. But it sounds like just people that suck at business. They're so used to like easy rate environments and free money and tons of liquidity that when the liquidity starts to dry up, they failed. And there's going to be a lot of that, I think, in a lot of sectors because liquidity is a completely different issue. And it's one that people haven't had to deal with. And that's why we talk about the difference between price and time capitulation. Sometimes price capitulation gets you out of your trade. It might stop you out literally because you have a hard stop loss in the books. Sometimes time capitulation gets you out. If you basically have a bunch of debt and then suddenly, debt costs 20%. Well, if you don't have to refinance your debt, who cares? Who cares? But if all of a sudden your debt duration comes up and you have to refinance and you go from 3% interest rates for that debt you have financed, and now you got to refinance it at 20%. Obviously, I'm exaggerating. But if you had to refinance at 20%, you're belly up. You're a zombie. You're done. You can't cover the finance cost or the interest payments. So that's how this ends up happening is, it's liquidity, it's time, it's, solvency, all of these various issues. And, staying existing as a business is balancing these things. And when certain situations happen that haven't happened for 10 or 20 or 40 years, it catches people off sides. And that's exactly what happened. People got caught off sides. People bet against the Fed. The Fed has been saying for years now, higher for longer. Now, granted, the Fed was wrong right before that about transitory, or at least they pretend like they were wrong about it. Obviously, you know how I feel about inflation. They were trying to get it, and they got it. So were they wrong, or did they just say one thing and something else happened? I mean, they were just, I would say they were dishonest, not wrong. But anyway, that's all beside the point. In my opinion, all of this is because of poor management. I haven't seen anything else otherwise that tells me otherwise. So, but I could be wrong. We'll see. Hex Evolved, amazing trade, liked. Soto says, I see, I missed the first part of the discussion. No worries, brother. Had to cover their liquidity issues. Yeah, it was liquidity turned into insolvency. Because the truth is, if they still had, like, okay, for instance, if they could have just took those bonds that they sold and lost $5 billion on or whatever, they could have just took all those bonds, gave them to the Federal Reserve. You know, that's pristine collateral, theoretically. I'm assuming it was like treasuries. It probably wasn't. It was probably mortgage-backed securities, treasuries. It was probably like, you know, all kinds of like trash in there, junk bonds galore, I'm sure. You know, because obviously they were chasing yield in a time. This is all something that happened when there was no yield to be found in fixed income. If you could just go back and unwind that trade and now they could just put it on, they'd be fine because they'd be making 4% in these long bonds and stuff. So the real issue was the actual like liquidity led to the insolvency issues. They had plenty of money, but they had to sell stuff at massive losses in the case of bonds. And everybody knows if you have a bond and you just hold it to maturity, you don't take a loss on it. The loss is just the value of the liquidity. If you have to sell your bond right now, you have to take a loss because nobody's going to pay full price for it because now they can just go get a new bond with a much better interest rate. So if you were locked in at 1% and the current interest rate is 5%, nobody wants your bond. So you have to pay them the extra interest that they're missing out on to take that from you. So that's where the value of the bond goes down. So that's really where the loss is at. It wasn't until they had to realize that loss, which was when they needed the liquidity to give to people that were quote unquote having a run on the bank. But it's not just like regular people coming. It was other institutions that didn't trust them because they were going out into the public trying to raise money, which presents the fact that, hey, they probably have liquidity issues if they have to go out and raise money. So that was what was like the red flag and caused essentially this whole thing. And then it led to insolvency, obviously. All right, so anyway, but who cares? It's not boring ass bank stuff. So, okay, big surprise. Oh, some businesses went out of business and they were the most risky, most poorly managed businesses. But one of them was really big and really old. Oh my God. Okay, sure. It's like, it doesn't surprise me at all. So we're going to see this happen in all forms of businesses all around the world. Big companies, companies that have been around for a long time. It happens all the time. People just think it's crazy when it's happening. They're like, oh, it's the 12th biggest bank in the USA. Oh, it's the second biggest, you know, blow up ever in the banking industry. Oh my God, it's crazy. I don't think it's as crazy as people are making it out to be. But that being said, let's look at Bitcoin. So what happened? All right, we got the exact move. We broke down to 200 simple. We bought the 200 simple, of course, obviously. I didn't literally buy it to the penny, the absolute bottom. Some group members did. Congratulations. Like I say all the time, guys, I mean, I don't always get the best entries. We don't always get the best exits. We're just looking for the cream, okay? Like, you can have the little Oreo cookie down here. You can have the little Oreo cookie up here. We just want to feast on the double stoof right in the middle, all right? They're good stuff. And that's what we got. We got it. We did it. So normally I would take a bunch of profits at the 200 exponential because the trade setup like played out beautifully. But right now I'm hanging tight. Let's look at the shorter time frames. We'll pay attention. Why? Actually, we don't even need to. We'll just look at the daily. We have the internal retracement Fibonacci from the top up here to the bottom. Assuming the bottom was in, what we were looking for was initial test on the 236. Actually, let's go down to the 4 hour because this was basically what tells us the bottom is in. We hit the low right here. We put the fib in place and then we look for the back test of the 236. So we got it immediately. I mean, not literally immediately, but we back test the 236 right here. So that tells us, okay, there's a good possibility the bottom's already in. So we come down again. And what do we get? A higher low. That you guys know about the higher lows because we were just talking about those. As crazy as that is, it's like we do the same thing all the time and it works. It's nuts. So we get a low, we get a high, we get a higher low. So the next target after that, we already hit the 236. Next target is the 382, which we got it. Daddy got the 382. Okay. So look how weird this is. Big candle wick, 236 touch. Coincidence? Big candle wick, 382 touch, coincidence, pull back, big candle, touch, 0.5. Wait a minute. Are you guys seeing what I'm seeing right now? It's like other people, okay? And I'm not talking about other YouTubers or like, you know, random traders at their house. I'm talking about actual people that matter, bots, algorithms, market makers, whales, the federal government, whoever it is with the Bitcoin that they were going to dump on the chain, whatever the biggest rumor is going on, they're doing the same thing we're doing. They're using internal retrace Fibonacci's to move price action, right? I mean, I guess it could be a coincidence. Maybe we just randomly bounced to 236 perfectly. And then right after, that was random too, I'm sure. And then this, well, I mean, that was obviously random. So we'll know. This will be the final decision if this is random or not. If not, we're going to have to admit that TA is not just some weird witchcraft. If we touch the 618, 22,946, if we touch it, we know. We know technical analysis is real, and we have to believe in it, okay? Just like unicorns and Santa Claus, it will be factually proven to be a real thing. So we'll see. We'll see what happens. I mean, I'm not, guys, I don't believe in that hocus pocus BS, but it does look convenient. Now, maybe it'll just, I don't know. We'll come up with some other reason why it perfectly touches the 618. But, I mean, let's just assume that we get lucky and there's going to be one more leg on this thing. That's probably where it's going to take us to. And really all that is, we're backtesting resistance. We're backtesting the 200 exponential and simple. You know, this is our cascading waterfall as appropriately identified. That's exactly what we want to see, guys. This is capitulation. Everyone thinks we're going to zero. Then the news comes out and says that Mt. Gox is going to be dumping Bitcoin, and, you know, the CIA is dumping all their Bitcoin, and the world's going to come to an end. And that's when we buy, just like Tesla, at the absolute bottom, because we know. We know when people are max scared and max bearish, the bottom's in. And of course. So now everybody's going to get really bullish again, right around up here, around that 618. And you know what we're going to do, guys? We're going to dump directly on their faces. I know. That's mean. But it is what it is. That's our job. Have to do it. It's not for everyone. Now, the only reason we didn't take profits already, because normally we lock in those gains. Chart actually looks pretty bullish. We bounced the 200 simple perfectly. We're back on top of the 200 exponential. We're back above the 8. We're not, I mean, we're above the 21, but we haven't closed back above it. So what we want to see happen here is not only obviously the push up to the 618. Of course, we want to see that. We then want to see consolidation above the 821, the bull cross happen again, and then we want to push up here, and we do not want to see a lower high. If we get a lower high right here, it's back to talking about what we were talking about before. Same way we get excited with higher lows, we get sad by lower highs, or whatever the opposite of excited is. Excited feels like a lot more like, I don't know. There's just a lot more like panache behind it. Sad is just kind of like meh. So I don't know. Whatever the opposite of excited is, that's what we get. But in the meantime, multiple green histograms, hard buy signal coming out of the bearish control zone. Big Daddy knife is on top, powerfully angled to the upside. You know, we're exiting the bearish control zone. I mean, this thing could have some legs. We crossed 821 back to the upside. This is literally the best buying opportunity ever. If we go into a bull market right now, arguably the only place that would be better to buy than the higher low is the lowest low. So if you bought the lowest low, congratulations. If you didn't and you bought the higher low, well, not quite as much congratulations, but still you did a great job. So that's what we're looking at. So we'll see what happens. We'll see how it develops over time. If we start breaking back below 200 exponential, that changes things. Let's see look how this translates on futures. So we came down here. Okay, look, go back, watch a video. You're not going to do it. But if you did, which you're not going to, but if you went back and watched a video, I actually say in the video that the low that I'm expecting on futures to come down here and close the gap. And I know what you're thinking. You're thinking you're going to say that you called it to the absolute dollar, and who cares because you didn't, or you just got lucky or something like that. Well, 19,520 is what I said in the video. And it's not like I just counted off 19,919, 19,920, 19,009. No, literally 19,920. No other numbers were even said in the video. So did we get lucky? Yeah, obviously. Could have done all kinds of stuff. But I mean, we get lucky a lot. You got to admit, guys. We get lucky a lot. So we came down here. We closed the gap. We opened a new gap. Okay. We even talked about it in the group. I was asked specifically, hey, do we just sell into the gap fill close and that's it? Or the move up here because once futures open, it's going to close the gap again. And we talked about this exact situation and why we didn't. Because we had a nice little trade set up in play. It looks good for now. We're going to play it out. We're going to see how it runs. Anything could happen here. We're not seeing still the same thing line up on the 200 exponential and simple. So we have to respect both of them. We have to watch out for both of them. We're technically still below the 200 exponential on the futures chart. So it doesn't look quite as good. But we'll wait and see. We'll wait and see. This looks good to me for now. But we have to remember too, it looks good to me for now because we're in a scalp and it's working out nicely. It does not mean that we're going immediately back into a bull market. This is the obvious move. The same way this was the obvious move to buy the 200 exponential on the back test. This is the obvious move to buy the 200 simple on the back test. If we go to a lower high and we top out at 618 or 786 and this rolls over, we could easily take out this low. And then again, we have to be careful because that could potentially be a buying opportunity, but also we could lose the 200s. So market still developing. But congratulations to all the little dirty little scalpers out there, okay? I know some of you little Bitcoiners and Ethereum guys out there scalped up the absolute lows. Congratulations. Beautiful. Well done. Touche. I personally did not go with the ETH trade. I went back to my little guilty little pleasure. You guys know it. You love it. You probably know more about it than I do because I don't know anything about it. That's right. I dabbled back in the old Polygon. I dipped my tip in the Matic. That's right. I know. I'm dirty. But it is what it is. Okay. So we'll get there. So Ethereum backtest at 200 simple. Beautiful. It was looking disgusting. And then we get this sick rejection candle. Daddy says, I don't think so. 200 simple holds. And then after that, it's party time. Beautiful hard buy signal coming out of the bearish control zone. Multiple green histograms. Back on top of all the moving averages. Ethereum, did it bottom? Is it going higher? Is it going lower? I don't know. I wouldn't want to be the guy who buys and sells after all the moves happen. I'll tell you that much. Because if you are just the guy that like after a bearish move happens, you sell, you sold the bottom. And if you're like buying after the bullish move, probably buying the top too. So careful. Total weekly market cap, hanging out in between all the moving averages, just kicking it in the cluster, so to speak. In the bullish control zone, exiting right now. Pretty neutral right here, about as neutral as it gets on the weekly. Bitcoin dominance, this is with everything involved, still moving to the upside, still looks okay. Consolidating here, exiting the bullish control zone, about to get that hard sell signal. Doesn't look great, but it's holding on for now. Subtract out the stable coins, and it's slowly just creeping up. So we're squeezing into this little triangle. It's going to burst in one direction or the other. Bias is technically to the upside. Momentum is rolling over to the downside, though. So I don't know. We'll see what happens. There's definitely a little bit of like contagion fears with stable coins and everything, as like BNB is like, I'm sorry, Binance coin. No, that's not the one. The Binance stable coin is like losing its peg like nonstop. So I don't know. Maybe don't have your money there. Probably. It's definitely not like a Ponzi scheme. It's definitely not like fiat, but digital. I mean, it's definitely not the opposite of everything crypto people say, like that they don't want a part of, that they're like literally a part of. That just tells you too, like crypto, no offense to crypto bros and lady bros and crypto lady bros. No offense, you guys. But the truth is, okay, how much did it really take for like all of your like morals, all of your like soldier arguments to go out the window for like decentralized finance and being free from the system and all that stuff? I know exactly how much it was. It was like 6%. Okay. As soon as they started promising crypto people 6% to just sit in these trash fake fiat stable coins, they were like lining up at the door. Okay. Some of you guys broke down for less. Some of you did it for 4. Other you guys did it for 10, but you also lost all your principal. So, I mean, let's be real here. That's it. So if anybody ever asks me, you know, how much does it take to buy a crypto bro? It's about 5%, roughly 5% interest. Okay. And most of them are like, I don't even care that I lost my principal, man. Sucks that I don't get that 5% anymore. Oh my God. People are so stupid. So anyway, Matic is next. So yeah, we did it. We dipped our tip back in the old Polygon. Just bought the 200 simple. Actually, you know what? I'm not even a good trader, so I just bought it right here ahead of time because it was like bedtime. I didn't want to stay up and wait for like the perfect entry, so I dipped my tip right here. So we did it. If we break down below the 0.5, the 200 simple, I didn't want anything to do with it. I figured we're dropping down to 382. If not, we're probably at least back testing the 618. It's already up a bunch since then. Congratulations. Blah, blah, blah. 4-to-1 risk reward traded setup. When we get up there, we'll be back on top of all the moving averages. Are we just going to go higher from there? Is this just going to be another beautiful entry in another beautiful scalp in the dirty, dirty little Polygon? It is. It is going to be another one. Hard buy coming out of the bearish control zone, multiple green histograms, bouncing the 200. I mean, this is like the easiest trade setup ever. This is the easiest trade ever. You guys didn't need me for any of this. It was fun that we all got to hold hands and sing and win together. I mean, it's always fun to do that, but I mean, let's be real. Okay, anybody could have done this one. You guys don't need the channel for this. This was the easiest trade setup in all of existence. So that being said, I don't even think anybody else cares about this. BAT, BNB. Yeah, so broke down pretty aggressively, back testing the 200s, a little weaker than a lot of the cryptos, didn't quite get back on top of the moving averages now, still kind of hanging out in that zone, still some red flags, and like honestly, there was already like big red flags and issues with BNB, but now with, am I saying the right stablecoin name? Is it what is it, Binance, BUSD? Yeah, I don't want to like FUD the wrong stablecoin, God forbid, like what, 10 people get like misinformation from me on this. There'll be like a YouTube stamp at the bottoms like, this presenter is presenting misinformation about Binance coin or whatever it is. It was like, I looked at the peg earlier, I think it was BUSD, and it was like way off. So just be careful in these trash stable coins right now, please. I mean, just do whatever you want. I don't care. Just do whatever. Just, it doesn't even matter anymore. The Fed will just bail you out. Just write them a letter and be like, Dear Jerome Powell, I made some mistakes and had to take the loss. I'm not happy about it. And my wife makes me sleep in a separate room now. Please bail me out. The end. I mean, P.S. Thanks. So gold obviously seeing a little bit of a pumpy pump. You know, what is this? This has nothing to do with gold's actual price or anything. This is people scared. They're scared of bank runs. They're scared of government debt. They're scared of spending. They're scared. That's when gold does well. So people are scared. It just so happens conveniently that the fundamentals of people being scared line up also with the 200 exponential. Complete coincidence. Technical analysis is fake. That was a lucky bounce based on fear. Silver looking like trash. Still below the 200s. Dropped under 20 there as we discussed. So, you know, basically just trading in that same range it's been trading in forever. So this was interesting. Obviously, we saw some pretty aggressive selling coming into it was weird because we saw it in the leaders, okay? Everybody's been talking about industrials and like, you know, Dow stock's been leading the way out of basically the bottom, the bear market, whatever, pretty aggressively off the lows, and also small caps. And the argument for both those has been that these are the top performers in XYZ environment. Two completely different environments, but that's fine. Enough people were betting on them. We saw big moves in them. We saw the Russell roll over hard, and we also saw that in some of these big names from the Dow. So we saw CAT break down here to that key level. You guys remember this level right here? This was the last. This was actually, I think, there was only 2 times that I was wrong about anything ever in the last like 5 years, okay? I'm pretty sure. Well, 2 or 3, okay? And one of them was right here. It was at this line right here. We talked about this, and I said it might break down, okay? And I was expecting, actually, it was going to break down. It didn't, and then it went higher. So we're back at that line now, so that is very important. Also, you know what else is very important? Did you understand how sarcasm works? Because if you don't understand how sarcasm works, you're going to just think that I'm a prick, and it's 50-50, okay? Part of it's sarcasm, part of it is actually correct. So that being said, we're back at that support line. Very, very important. Okay, so lower high happened right here on the shorter time frames. We're back at key support. Also lines up with the 200s. We don't want to see this thing start losing the 200s, as this was one of the big names. Again, though, very, very aggressive knife stab, but it also kind of corresponds with a rejection on the slope line here. So kind of getting some mixed signals from these big names here. We saw a same big move in Deere. So, you know, what is this? Is this the pivot getting priced in instantly? Maybe. Maybe it's possible. Retesting 200 exponential now. 200 simple is not far lower. We really got to watch out for some of these things. And it is important that you guys obviously tune in live every single Sunday and also Wednesday, because you don't know what's going to happen. Okay. The whole thing might change. I might be talking awesome stuff about XRP one week, and then the next week it's complete trash and I'm just bashing it. And you miss that week and you might think XRP is still great. And you're like, oh man, last time, can't wait to see this stream. He was really excited about XRP and was saying some really nice things. And then you miss a week, you tune on, and suddenly I'm talking about how XRP is the trashiest trash ever. It's complete garbage. So make sure you don't miss it. Make sure you don't miss it. The narrative could change real quick, guys. Real quick. You know how quick I flip on my shit coins. So that being said, another big name right here, UNH, melting down as predicted. You guys know, I mean, we're at the last line in the sand, the 886. It never stops here. It always goes deeper, always. 88.6% of the time. So 236 macro, new low on UNH. You know, the number one biggest name in the entire Dow Jones. Kind of important. Very clearly in a bear market, breaking down to new lows. You know, where does that say the actual market's going to go? Is it possible for the Dow to just keep ripping to the upside while UNH, the biggest Dow stock, just melts down? I mean, anything's possible, I guess. But GSG, back at support at the lows, the lowest low. Again, just we're chewing through these buy orders. Every time we come down here, we just chew through a couple more. And then eventually, there's nothing to bite. We're just going to drop through 18. You know it. You love it. It's been the target forever. LNG back at the 200s. Looks like it's rolling over. I mean, what is this? Short squeezes, gap up, come back down, fill the gap. If it keeps ripping right here, maybe not. Shell, still just kind of creeping up here, kind of putting in like this little ascending pattern. I mean, it looks okay, honestly. You got to watch out for these things. So Mosaic did what we were discussing. Basically top back out here at essentially just another descending triangle. Breaking down below 200s. I mean, it looks like it wants to come back down here again and just retest the lows. And this is why it's so important. We talked about the difference of, like, you know, the lower high, but sometimes the next one doesn't line up in that little line, but it's still a lower high. Still a lower high. And that's what matters. And we were saying the same thing about the higher lows earlier. It doesn't, you know, TA is not always pretty the way you want it to be pretty. But when you draw it the way it's supposed to be, you know, like if you just had this green one right here, the red stuff right here, what didn't exist, you're like, I guess it's, I mean, it's technically still a lower high, but, you know, it didn't get rejected exactly at that resistance line. But that's how you want the TA to look. If you let the TA draw itself and you just do what's here, it's always beautiful. It's always beautiful. I mean, if you believe. If you don't believe, it just looks like gibberish. So that being said, I mean, it looks like we're coming back down. Touch the bottom here again. Is it going to be the time it breaks? I don't know. We did get the... Hang on. Good transition moment. Sorry, I had to wet my whistle. Good transition moment right here. Speaking of breaks, ACB breaking down to the lowest low ever. Am I right? Oh my gosh. Look at these dirty little pot stocks. Just like we discussed so many times. It was just a matter of time before everybody ever is a bigger loser. And I mean, they just keep disappointing. I honestly can't imagine this thing doesn't go to zero. I can't imagine that just all publicly traded pot stocks with zero exceptions all go straight to zero. I can't see a world where they don't. So that being said, on the way down, I'm sure there's going to be some nice bounces, but man, are they trying. URA at the bottom of the triangle. We have this support in white here. It's been holding up pretty good. July of 2022. That was our support. We tagged it here perfectly. We're at it again. So is it going to hold again and take us back up to this resistance, which is even stronger because it goes back even further? That was our macro peak in November of 2021. So we're just squeezing in between these two things. And the white one, we could lose that and still have the blue support going back even further. And honestly, I have to say that looks like the probable scenario. It looks like, you know, and up to downside, if we come back up here and test resistance, it's 12%. If we break down here and test support down here, we're talking about like 15%. So it's really just a coin toss again. But we are looking at a buying opportunity somewhere down in that range as we just sort of like consolidate lower. Here we did sort of put in some higher lows and it looks okay. But when you really zoom out, I mean, this is a clear high. That's a clear low, clear high, clear low. This whole area right here is a little bit sketchy. It's not crazy to think that we're going to break down and put in a new low. Matter of fact, that's the base case. So uranium stocks, I know the dream is still alive and the nuclear, and I get it, guys. I'm still a believer, okay? But I also believe in preserving capital. So I'm not just going to hodl these things. Neo and the whole China story broke to new lows as expected, as predicted. I mean, when you lose literally billions of dollars every year, I mean, I would think that you're probably worth nothing. So I would expect this to go to zero, right? I mean, this is it though. We talked about the 618. We called this at the bottom way, way in advance. We're there now. So either this area holds and $8 is the best buying opportunity ever for Neo, and this is the macro bottom, and we just go bullish forever, and this thing just, I mean, prints money. I'm talking about island money, okay? Not island boy money, okay? Not face tattoos and, you know, cameos. I'm talking about real money, okay? Island money. Or the 618 doesn't hold at $8, and this thing's going to $4.53. So, I mean, we'll see. It looks like trash. Looks so bad, guys. Looks so bad. Baba, it looks so bad. I mean, it looks so bad. Any like hope there was of saving the 200s was just thwarted. I mean, nobody wanted to buy this anymore. It came too high too fast. Okay, this is it. It was melting down. Satan gave it some wax wings. It flew up, got too close to the sun, and did the Icarus. I don't know if that's a real story. I might have mixed up some stories there, but that's what happened. Okay, the devil gave it wings. It flew to heaven, the sun melted the wings, and then it fell back down, and now it's going straight back down to hell, metaphorically. But I mean, it looks terrible, horrible. The longer the time frame you look at, the worse it looks. And I know what you're thinking. You're like, that can't be right. You're exaggerating. That's pretty bad. That's the monthly right there. Okay, we bounced up to 21, then we lost the 8, and now it looks like we're melting down. Maybe if this monthly closes back above the 8, if the monthly Alibaba chart gets back up to 92.52, this might look okay. And maybe that is. Maybe, you know what? Maybe you guys just convinced me on stream right now. Not even by saying anything, because you can't interact with me, but just by your sheer presence, that this is what's going to happen. Is that what's going to happen? Alibaba bounces right here. That's the bottom of the right shoulder. We rip up into the 200s. We break through those. The beautiful trade setup plays out. 39% upside. Okay, hear me out. 3-to-1 risk-reward ratio. Break through that. Take some profits, of course, just in case it fails. And then the next move up is actually 92% back test of the 6. Okay, I'm following you. And then back to the all-time high. I don't know, guys. It doesn't seem likely, but there's something there. It's like there's a reason we drew this on the chart. So I'm going to take a look at it. All right. Obviously, don't buy Alibaba or you'll just lose all your money. It'll go to zero. And then you'll have to move in with your parents, or maybe even like it could be a really bad situation. You like end up homeless or something like that. Because apparently it can just happen to anyone. It has nothing to do with decisions you make like along your life or anything like that, like getting addicted to drugs or anything. No. If you're homeless, it's because the world is mean. Okay, it could happen to anyone, apparently. So I'm told. I don't know. It's hard for me to imagine a world where like certain people in my life end up homeless. I'm like, wow, what a turn of events. I can't believe you went from doing so well to being homeless. I don't think it really happens like that, but whatever. So I guess it's just not your fault if you're homeless anymore, or if you're addicted to hard drugs. It could happen to anyone. So I'm with you. You got my vote. So anyway, you guys have no idea what I'm talking about, but I promise you, people say crazy stuff like that. So yeah, I think that's it. I think we did all the charts. We looked at all the things. We talked about the stuff. Okay. We explained why there's incompetence, and that's why things are imploding, that it may not actually have to do as much with the system. I think that pretty much nailed it. We got all the big topics in there. I'm sure we're going to have some fun stuff to talk about this week. There's going to be some crazy volatility in these markets. Here's the thing though. We just got some really bearish stuff happen in crypto. And everybody was really bearish. And we specifically came out in the group and we're talking and said, you know what? Regardless of how bad the chart looks right now, regardless of what it looks like is going to happen, I'm going to go ahead and do what I said I was going to do, which is buy the 200 simple when we get there. Because it always looks really, really bad when we're breaking down. And then you know what happened? It played out perfectly. So let's not assume that just because some of these other charts are looking bad right now, that that's it and they're just going to go to zero. Because they may present some amazing buying opportunities. And we may see that's the case for the DXY or the TNX. We may see that's the case for the Dow Jones. But right now, the markets are still making up their minds. And there's going to be a lot of breaks to the upside, breaks to the downside. We just got to keep a cool head. And if we chart everything out in advance and we plan for everything's going to go in advance and targets and trade setups and everything, then when we get there, we're fully prepared to just buy the 200 simple like we planned, because that was our plan the whole time. And really, we're just executing on the plan. Instead of the markets are melting down, we're getting some massive candle, everything's going straight to zero. There's all these articles coming out about, you know, why the world's ending and your investment's gone now. Don't even worry about it because it just went to zero already. There's nothing you can do about it. That's when we want to be the buyers. And oftentimes it works out the best. Now, you don't want to just always be a buyer because everything looks bad. But, you know, that's what the bad news is, what takes it to the support levels to give us the good buying opportunities. The same way that the good news is what propels us up into our selling opportunities. So right now, while we're chopping around, while we're kind of doing this little like dance around the 200s and figure out the trend, we need to be a little quicker to take profits and a little quicker to basically buy support and sell resistance than normally, and just assume we're just going to get choppy for a while. We'll keep part of our positions open, but we don't want to have complete conviction, bullish or bearish, because the market doesn't have complete conviction. And what are we really doing? We're basically just like one of the, there's like those crazy sharks with like the giant teeth, and they just like murder anything that comes near them. They just like, anything that comes near them, it's just razor sharp blades, just munching them. Okay, we're those little other fish. Okay, it's not like actual like shark, but it's like the little buddy like fish, and it's just kind of like suckered onto his side, and we're just kind of like cleaning off like the algae and stuff. After the shark gets a fresh kill, man, maybe we'll kind of swim into its mouth, grab a little something out from in between its teeth. That's us. Okay, the market makers are the sharks coming around here. Just I'm blood in the water. All right. And we're just swimming around. We're just eating up our little algae, little buddy fish. Okay. Shark doesn't eat us. We scratch its balls sometimes or whatever. You know what I mean? We're friendly guys. So that's us. Okay. Not in a weird way, obviously. And honestly, you guys sound idiotic right now because sharks don't have balls. Right? All right. That's it. Remember, this is not financial advice. I'm not your financial advisor whose markets are extremely volatile. Please do your own research. Trade responsibly. And also, don't get off this stream and then immediately go Googling, do sharks have balls? Of course they have balls. I mean, male ones, not the females. Eyeballs. All right, that was fun. I'll see you guys on Wednesday. See the group in the meantime. Look out for those static videos. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. There you go. You can be a piranha, Digital Durwood. Unfortunately, we are in the ocean though, so I don't know. I'm not sure how that's going to work out because I think piranhas are freshwater. They're actually, you know what? No, they haven't been in the Amazon, right? So you're okay. You're like brackish. You could be a brackish piranha. Just kind of hang out near the causeways. Later, Axie Bob. Good to see you, man. Appreciate you all tuning in. Everybody have a good night. Hopefully everybody had a good weekend, had a little fun. Because we're going to be serious. We're going to be serious on Monday. We're back to being serious. This is a serious stream. We're investors. I'm a sandworm. I'm a tapeworm. Okay, I just want a little bit of your lunch. All right, I'm not greedy. I just want to live inside. I want to be left alone in a warm, dark place. All right, I'll see you guys later. Everybody have a great night. That was fun. Appreciate the laugh, guys.